94.3.
This is Good Morning Mumbai with HrishiKay.
Radio One.
Welcome to the Thursday edition of Talking Finance with Saurabh Mittal, my expert, and he's back. Hi, good morning.
Good morning, Rishi.
Saurabh, property buying under loan is something that all our listeners are interested in.
Yeah.
Especially people who are looking to buy in under construction properties or properties which are already a possession, new properties.
Right.
And there are a new set of home loans for under construction properties, which is great news, and you'd like to tell us about that.
Yeah, so there is a built-in safety feature which is now provided. A couple of lenders have started offering home loans targeting buyers for under construction properties. State Bank of India introduced the Residential Builder Finance with Buyer Guarantee, which is called RBFBG scheme. Under this scheme, the bank will refund the principal loan amount to the borrower if a developer fails to complete the project. LIC Housing Finance has launched Pay When You Stay scheme, wherein a customer doesn't need to pay the principal portion of the home loan up to 4 years when he buys an under construction house. So this scheme is slightly a tweak from the existing trend. Usually when a borrower takes home loan for an under construction property, the loan gives a moratorium of up to 3 years, during which time the borrower only then needs to pay the interest component of the loan. A 3-year moratorium takes into account the fact that during this time the construction of the house is complete, and so hereafter the borrower can pay the interest as well as the principal through EMI. But if the construction is delayed beyond the moratorium period, the borrower ends up paying principal as well as the interest.
But I believe LIC's scheme is a little different, and they've done a bit of a tweak on that.
Correct.
Please tell us about that, please.
So LIC Housing Finance scheme extend this moratorium by allowing borrowers 48 months. During this time, the borrowers needn't pay back the principal component, but will have to pay the interest charge. The interest will be charged based on the amount lender disburses to the developer. Once the customer receives the possession, the regular EMI will start, where the lender will charge principal as well as the interest. Now in these cases, the minimum loan a borrower can take is up 20 lakh rupees and the maximum amount is 2 crores.
What would be a recommendation under given circumstances, Saurabh?
So the product works for purchasers who are living in rented accommodations and buying properties in the lender's approved list of projects. The moratorium period will reduce their financial burdens. Otherwise, they would need to pay the EMI as well as the rent, which can impact their finances. While availing loans for under construction properties have become easy, but they come with many strings attached. The EMI may reduce financial burden, but any delay in construction only means that more interest needs to be paid.
Correct. What's your quotable quote for the day?
So it's quote by someone unknown saying running into debt isn't so bad. It's running into the creditors that hurts.
If you want to invest, where can we reach out to you, Saurabh?
So you can